So, as a trader, as an active trader, I like to see and watch and monitor the relationship between commodity prices and the price of the US dollar. Today, in the commodities markets, or the precious metals markets at least, gold took a severe hit, down $2.22, a nice long day candle, Morobozu, to the downside. And when I bring up the chart of also silver, let me just do that for you right now. You can see the similarities in the daily price action. Yes, we are getting very, very close to the short-term swing lows in price, going back to November 2014 on silver. And also, if I change back to the price of gold, you can see the similar lows being made or set up in November 2014. It would not surprise me to see the price of gold and silver at least come back down and retest these old swing lows as we move into 2015. Long-term price projection for gold anyway is getting close or very close to that $100 limit. If I change to the weekly here and go back and have a look at my chart, you can see going back to 2008 on the GLD ticker symbol, you can see we've had one touch here. This is a weekly chart, by the way, because we're factoring in just so much price action to the left. We had almost another touch in mid-2008. We had another touch in 2009. This is really the psychological round number, the line in the sand for gold, where I do believe it's going to go through a very, very strong and withdrawn period of accumulation where the institutional investors, all right, the people who really espouse the worth of gold, its material worth to society. I do think there are going to be a lot of people accumulating large positions of physical gold and also the ETF around $100 a share. Gold and silver will have their day again, but the only time in which they are going to have their day is when the price of the US dollar, if I bring up right now, ticker symbol DX, really starts to fade. Now, going back and having a look at the dollar is trading at multi-year highs. I do believe we have to go back to 2008 to see the relative high or the levels at which the dollar is trading at the moment. I'm just on a weekly chart. I've changed it to a line chart just so you can see these spikes to see where the US dollar has been and where it is comparatively at the current juncture. Right now, I am on the weekly chart. This is going back to 2008, 2009, 2010. Right now, we're trading at 89 cents compared to where we've been back in 2008, 2009, 2010. These are all-time highs or multi-year highs, 5-year highs for the US dollar. This is huge news. This is significant news for the US dollar. So keep an eye on this relationship as the US dollar continues to appreciate in value. It has been going through what I believe to be a very withdrawn period of accumulation, very similar to what gold and silver have or are actually going through at the moment also, but we have been going through a very, very strong period of accumulation on the US dollar. It hasn't been depreciating in value. So I'm just trying to get the right chart, the weekly, and change to a line chart for you. It hasn't been depreciating in value, if anything. It has been stabilizing, and it has been in a severe period or prolonged period of accumulation. I do believe we are breaking out on the weekly, and we are going to see again an influx or a very severe appreciation in the price of the US currency moving into 2015 and possibly into 2016. The price of gold, if that is the case, is going to continue to deflate. The price of gold will see lower lows. That $100 price level is something which I am paying close attention to. Also on the silver ETF, I'm not too sure, in all honesty, how low silver can go. If we go back to 2008, 2009, it was priced at about $8. All right, $8.45. These were the lows. If you have a look at my chart up around here, when I hover my ticker symbol over some of these weekly bars, you can see 845, 866, 958. I think 845, it looks as if was the ultimate low. Right now, we're trading at about $15 a share, so there is still comparatively, you know, another 50% to be written off in the price of silver if it wants to come down and revisit these old lows established in 2008, 2009 for the price of SLV. Having said that, generally what happens is when we see the dollar, let me just bring up the dollar again, or as the dollar appreciates, generally what happens is that the market, the general stock markets, need to pull back. They need to sell off. They need to correct, given for, of course, the appreciation in the US dollar. The more the US dollar appreciates, the more stocks you can buy for that same relative dollar, or the same purchasing power actually increases, the price of shares come down, right? They come down. So when you correlate the two, have a look at this, do a little bit of study in your own time, compare the price of the US dollar to, of course, markets such as the Dow Jones Industrial Average. Let me bring them up in the pro analysis watch list. The Dow Jones Industrial Average, the S&P, and also the NASDAQ. You'll see that when one rises or one appreciates, the other actually depreciates or sells off. At the moment, we are correlated, all right? So they're moving in the same direction. This cannot continue forever. One of these markets, either the price of the US dollar is going to adjust. It's going to change the trend from up to down, or it's going to go through at least an intermediate reversal, or in fact, the US markets are going to go through a longer term reversal, possibly back into the price or back into this primary trend line, which really established the market since 2009, coming off the lows back in 2009. All right, so these are things which I'm looking at moving into 2015. I've touched on the price of the US dollar, commodities markets. Oil has had a pretty decent bounce. It's well above the $50 barrel for the WTI crude oil. I think it's closer to 60 at the moment. I haven't paid too much attention to it today specifically, but it was trading about $57 a barrel. Having said that, ladies and gentlemen, I hope that information is worthy. One thing which I haven't touched on was the fact of the discussion that the Fed is talking about raising rates. If that is the case, that only puts more pressure on the US dollar in the way of appreciation. It will, or it should go through an even greater appreciation if the Fed announces an interest rate increase. That, of course, will be quite bearish for the markets. They will go through a period of correction if the Federal Reserve raises interest rates. I cannot see that happening, in all honesty. I don't think the Fed has the guts to do that. It will put a significant slowdown on the US economy for businesses and entrepreneurial investors to do such a thing, especially while an economy is trying to at least harness more natural growth instead of inflating what many call a bubble through artificial stimulus and monetary policy. So that's enough for a Monday afternoon market recap. Thank you very much for watching these analysis videos. Have a look at the pro analysis class if you're not involved. Enjoy your Christmas, and of course have a splendid New Year's. I'll see you all, actually I'll see you before then. I'll do one final recording on Tuesday before Christmas, and I'll put another one out a day or two before the New Year. So all the best, ladies and gentlemen. Goodbye.